I don't hear anybody else talking about this right now.
No.
And to me, just from a broader market perspective, we believe both gold and these digital assets are going to have a big 2024. I think everybody we talk to around Angel believes that. And I think the one thing that is hopeful about this potential like bull market in digital assets is that hopefully a lot of the crap that was out there previously, like you said, with the NFTs and all this stuff with the FTX and all these meme coins and all this kind of stuff, is people realize that there is nothing backing these. And you know, the term Ponzi scheme gets brought up a lot with a lot of these. And the truth is it's most of them are. All right, welcome to the Angel Research Podcast. My name is Jason Freert, and I'm here with Jason Williams once again.
Wrong hand there.
Managing editor of the Wealth Advisory, plus a slew of other services here. But the Wealth Advisory is your flagship newsletter.
I would definitely call that my
for
flagship.
Angel.
My pride and joy, right?
So welcome back. One of the things that I wanted to start out with, which is sort of newsworthy, is just they just released numbers for the national debt. $34 trillion. And I think it was in the news for like half a day.
If that.
Right.
If that. Nobody talks about it anymore.
Right. I mean, what's there to talk about, I guess?
I don't know. I really don't know. I mean,
there has to be a point where that matters, right?
Oh, definitely. I mean, I remember as a kid, every couple of years, you know, they would break it down by like, what does each American owe, you know, for the debt? And my thought, you know, because I remember being in my, I want to say 30s, you know, it's not even that long ago, where it was like $60,000 per American. And I was like, okay, I'll pay $60,000 if you guys promise not to run the debt up again. You know, like I would do that. I would pay that off for you, like if you promise not to run it up. But no, man, we're not going to promise not to run it up again. Come on.
No.
I don't know. I'll be honest with you. I mean, it just keeps getting higher and higher and higher. And with more and more politicians talking about like forgiving other people's debt, you know, like when are they going to start talking about forgiving their own, you know? Like when do we get some debt reset where they just say, hey, like, you know how we borrowed all that money from you? Well, we're not paying it back.
Yeah. And I guess we owe that money to lots of other countries, institutions, and all that. It does not seem like both the Republicans were supposedly for fiscal responsibility,
right,
and that seems to have been totally lost as well. So there's really not the politicians. They're both working for the same deep state, so to speak.
Oh, yeah, definitely.
So they're going to keep running it up.
They want to spend your money for different reasons.
Right.
Yeah.
And so I think everybody that follows us and listens to us is on the same page with that. They understand that it's ridiculous. The question is, when is that going to have an impact? Does it already have an impact? And how do we take advantage of that? And typically, when that happens, the path that goes down follows down to hard assets, right?
Yeah, definitely.
And so you've been fairly bullish on real estate, particularly REITs and all that. And we can talk about that at another time. But there's another hard asset that everybody goes to, and that is gold.
Of course.
It's like the OG hard asset. And gold is back above $2,000 an ounce. Mm-hmm. And where do you personally see that market heading this year? I know like you've really delved into it more with in a lot of different areas, but just as a broad market perspective, how do we see gold happening in 2024?
I think we're going to see a lot of interesting things with gold, which is kind of funny to say because it's like the most boring market in the world.
It really is.
I want to say boringest, but I don't think that's a word. But it's the boringest market in the world. I mean, it's super boring. You know, people talk about like huge gold spikes. It's like wow, it went up by 100%. And like, we talk about like huge stock gains, like 1,000% or higher. You know. But the thing is I think that we're going to see a lot of excitement in gold because, right, and this is something that I've been putting a lot of research into recently, and actually just a just gave my subscribers to Future Giants, my nanocap trading service, a recommendation to take advantage of it. But basically, gold finds have been getting smaller and smaller and smaller and smaller, right? Since 2000, there has not been a mega, like a jumbo mine found. A jumbo mine is one that has like 30 million ounces. Sorry, not tons, ounces of gold. Yeah. Right? And so since 2000, there hasn't been one of those deposits found, right? The last ones were found at the turn of the century, and mines have like a 10 to 30 year lifespan, before they start to get uneconomical to operate. And so those ones that were discovered at the turn of the century, they're sort of starting to like age out, right? And we're not finding any more big deposits. And not only are we not finding any more big deposits, but we're not finding any high-grade deposits also. So think about it this way, right? And this is just sort of like put it into like normal, like simple English for everybody out there, right? If you want to find 1 ounce of gold at the average ore grade, right, which is how many grams per ton of dirt you have to dig up, how many grams of gold you're going to get, right? The average ore grade is about 1.35. Right? So you'll have to dig up about 200 tons of dirt to find 1 ounce of gold. I keep hitting this thing. But yeah, you're going to have to dig up 200 tons.
That's a lot.
To just 1 ounce. 1 ounce of gold would fit on my fingertip. It's smaller than a postage stamp, right? It's crazy, and so basically like the more dirt you have to dig up to get to this gold, the more expensive it is to get to that gold. So you have this thing called the all-in cost of extraction, right? AICS is the number. It's updated every quarter. All of the gold companies in the world have to send in, what does it cost you guys on average to get an ounce of gold out of the ground, right? And right now it's about $1,300. With the price of gold at about $2,000, that means you have like a $700 profit that you can make there, right? But that's if you have an average deposit. So a couple of years ago, what I think is the last big jumbo deposit was found, right? And they're drilling it and they're testing it and, like proving out everything. And we're talking about ore grades of like 8,000, 3,000 grams per ton to 8,000 grams per ton compared to 1.35 grams per ton. So this is the kind of gold mine that's like a once in a generation opportunity. And I'm getting more and more convinced the more research I do that this is the last major gold find ever. That basically, like, we're finding less and less and less gold. And it's not because we're getting worse at finding gold. We're getting better at finding it.
Right. It's not like people are not out there looking for it.
Yeah. And the technology has gotten better. There are companies out there that are working on technology that you can go into like tailings from mines and extract value from the tailings. The mining process has gotten better and more sophisticated, but we're getting less out of it and less out of it. And it's because we're just running out. We found it all.
Yeah, it very much is. I mean, and this is like with any resource. And the easiest analogy I can find is the oil analogy. Mm-hmm. We were one of the first to talk about the idea of peak oil. Yep. And I don't know if the idea of peak oil has proven out necessarily because it makes sense as it's going up and then it goes down, but that's what happened, and then we discovered fracking, right? And then it comes back up, and now the U.S. is producing more oil than it's ever produced. It's back doing it.
But I think the idea of peak oil still holds water because, yes, fracking has basically saved the world, has definitely saved the U.S. energy industry. But fracking, those fracking wells, those aren't big deposits. Those aren't big reserves, right? So basically peak oil, the idea with that is that we have found all of the big fields. And now it's just little stuff that's left.
Well, yeah, they're going back and they're fracking all the old ones that they have, but once they're done fracking that,
what's left out of them. Yeah.
Right.
Yeah.
So and there's new
that's
technology.
Why I call it peak gold, because it's very similar to what we were seeing with peak oil, where all of the easy to access stuff, all of the low hanging fruit's already been picked.
Yeah.
So now it's going to get harder. And yeah, there's going to be technology that continues to, make the process more efficient. But as less and less gold's coming out of the ground, it's still going to be more and more expensive. No matter how much the technology advances, you're still going to have to pull out more and more and more tonnage to get those little ounces. And so basically, this company that I found, this miner that I found, they've I don't want to say stumbled upon, but that's sort of how you do it when you're looking for gold. But like they've found what could be the last major gold deposit. The grades are super high. Literally, you can see rocks from in the report that I sent out to my subscribers. You could see rocks, and they actually have chunks of gold in them.
Yeah, that's insane. That's like what you think of
that's what most people think of when they think of gold
out
mining.
In the 40,
the 49ers
going
and
out to
stuff.
California with their things, and a lot of them actually didn't find any gold. But
most of them didn't. But, and that's what most people think of when they think of gold mining is like, it's a miner and he's got a pick and a shovel and he goes out and he's like, oh, look at that, a big shiny rock of gold. But like, it's all flakes. It's these teeny tiny little flakes, like salt mixed in with sand.
Yeah, and you got to move all that dirt just to find a little bit of it.
Just to get a teeny tiny bit of it. And so I think, if I'm right, then I think that's going to send gold prices parabolic. I mean, skyrocket. We talk about $2,000 an ounce is going to seem like nothing. It's going to seem like pennies. We're talking about $15,000. Some experts out there, people who know a lot more about gold and have a lot more experience in the industry than me, are predicting it getting as high as $20,000 an ounce. So you're talking about a 10 times gain from where we are currently, and they're talking about that happening in the next year to say 3 years.
Right.
So I think we're going to start to see that happen over the next year as more and more people start to realize that gold is getting harder to get out of the ground, and there's less and less of it coming out when we are getting it out. And we still need it, right? Typically people use gold as a store of value, but it's actually critical to things like solar panels, EV batteries. I mean, pretty much any piece of technology, the computer people are watching this on, or the cell phone they're listening to it on, like all of those have gold in them.
Yeah, and I think people do not realize just how little there is of the metal above ground.
Oh, yeah.
And
it's like a couple of swimming pools.
It is. I think
here's something really impressive, right? The biggest gold mine in the world last year, all of the gold that they pulled out of the ground could fit comfortably inside of the backpack that I brought in with me today.
Yeah, that's
in a year.
Yeah, I think that you see it's interesting. You see like these heist movies where they're stealing the gold bars and stuff, and they're like, oh yeah, this year it's just like there's not just like gold bars like that like all over the place. Yeah. Like if you melted down all the gold above ground, I think they estimated it's something like a cube of 20 yards by 20 yards by 20 yards.
That sounds about right.
So it's like
I've heard the Olympic-sized swimming pool comparison.
Yeah, that's basically it. And so it's interesting because it feels like you see gold everywhere, but it's tiny, tiny bits, and a lot of it
is plated.
Is plated and or fake.
Uh-huh. Or it's you've got gold, like investment gold is 99.5% pure gold, right? The gold that is like in my wedding ring has other metals mixed in there with it.
Oh yeah, you got like 14 karat, like
14
all that
karat, 10 karat, 24 karat, even 24 karat's not pure gold, but that's like as pure as you're going to get for jewelry. But it's got other metals mixed in there because, if this ring was made out of gold, then I could just I could squish it. I would squish it, because I would take it off and play with it sometimes, and I would totally squish it. Or if I tap my hand too hard on the table, it would flatten out, So we have to have some other metals mixed in there. So really, when people see that gold everywhere, like they're just sort of seeing the color of the metal. They're not like the gold's not making up the majority of what they're seeing. It's either coating it or there's other stuff mixed in there with it. But yeah, there's just not a lot of gold out there. And there's and we're basically getting to the point where we've sort of found it all.
Yeah.
That's why everybody gets all excited when like an asteroid flies by and there's like, there's $1 kajillion worth of gold on that if we could just mine it.
Yeah, it's something we talked about earlier, or I should say a couple of months ago, was the Costco started selling gold.
Yeah.
And so to me, that's definitely a signal here. But what was interesting about that is they sold out like immediately.
Mm-hmm. And they were selling it for a premium.
Yeah, it's insane. And I don't know exactly their angle on that, but it clearly they determined that there was a demand there.
I mean, it's popular in other countries. Outside the U.S., you get a lot of people who buy investment gold as jewelry. Right. So there are actually little like 1 ounce tags that you can get, and they have a little hole in it, and you can put it on your necklace and wear it around. You know, your $2,000 little ounce of gold there. And this is really common in lots of other countries. And, you know, like that's how they're doing it. Actually, my godparents, right? My godmother's engagement ring was a $75,000 investment diamond. Because they were like, why buy jewelry diamonds? They lose value over time. I'll buy an investment diamond because those go up in value. So she had a fake ring that she wore most of the time, and her actual engagement ring lived in a safe because, you know, it was their retirement.
Yeah, people, when you talk about these countries that are, I don't want to say third world countries, but they're emerging economies where sometimes there's a dictator in there who's printing cash and all that kind of stuff, just owning that.
Oh, yeah.
As soon as a lot of workers get paid, they're switching it out into some sort of hard asset that is stable.
And it's funny you mentioned that, right? Because that's actually why some of the things like the stable coins, you know, like bringing this back like from traditional assets to digital assets, like the USD coin, right? That was super popular in Africa.
Yeah.
Not here in the U.S., where we have U.S. dollars that, you know, move with the coin, but in countries where, you know, they don't have a stable currency. So they were like, hey, as soon as I get paid, I can turn this into the U.S. dollar coin. I can turn this into Bitcoin. Down in Venezuela, wow, Bitcoin took off there way before it gained popularity here in the U.S.
Yeah, all those Latin American countries that, because they can't trust, I think it was Argentina,
and this is one controlled by the government.
Yeah, and this is one of the reasons that Argentina just elected that new president. Is because their inflation was getting so bad. It was like
horrible.
They had I forget who I talked to down there who did business with workers down there, but they basically every 3 months they had to give employees like a 30% increase in what they were paying them, because otherwise they were going to jump ship here. And it's just like, how do you, as a business, how do you run anything like that when inflation is out of control like that?
I mean, that's why the Fed here in the U.S. has a dual mandate, right? One of the mandates is employment, right? Keeping employment, you know, as high as possible or unemployment as low as possible. And the other one is price stability, because you can't run an economy without stable prices. It's just impossible. Look at Zimbabwe. Look at, you know, the Weimar Republic. I mean, you can't look at that anymore because obviously, you know, not in existence. But you see these places and you just can't have a successful economy if you don't have price stability. If prices are all over the place, if you don't know where they're going to be next year. And that goes for deflationary environments too. You know, if you think that stuff's going to get cheaper next year, well, you're going to put off the purchase, you know? I need a new car, right? If I think cars are going to get cheaper next year, then like, well, maybe I'll try and get another couple of months, you know, out of the Jeep.
Yeah, and used cars had spiked up, and they have definitely started to come down too. So people think that prices are always going to go up. That's not necessarily the case.
No, sometimes they do come down. You know, honestly, they usually come down in bad situations, you know, when we're looking at a recession and stuff. But prices don't just go up. I mean, they usually go up more frequently than they go down.
Yeah.
But yeah, no, definitely. And that's, you know, like I said, why cryptocurrencies became so popular in some of these other countries is, you know, like you've got, they're stable. You know, your currency is not stable. So I can take, you know, my bolivars and exchange them for Bitcoin or for US dollar coin or whatever, or for gold.
Yeah.
And then as, you know, the value of my bolivars drops, the value of my gold in bolivars goes up. So, you know, then when I actually do want to buy some bread, I can trade my gold for that wheelbarrow full of dollars that I need, and I can go buy a loaf of bread.
Yeah, to me, you can't talk about gold without also talking about I don't want to say necessarily cryptocurrency in general, because there's a lot of crap out there that people call cryptocurrencies.
Yeah.
But things like you said, like Bitcoin and these stable coins and stuff, because those are much more portable than gold. In order to transfer, you know what I mean, $100 in a stable asset to somebody over across the globe, I'm not going to buy $100 worth of gold and then bring it and ship it across. Right. So the gold demand that we're seeing, we have the industrial demand, which is really small, but that investment grade demand is usually these big players coming in and buying. But in terms of like consumer demand, a lot of people are going to be looking towards ways to hedge against that inflation that doesn't involve actually physically storing.
Oh, definitely.
The gold. Because there's costs associated with that as well.
Oh, yeah. I mean, you got to pay. If you want to keep your gold at a vault, then you have to pay for it. If you
and I personally, I don't know if I'm trusting. Like, to me, you maybe. So if I'm going to buy gold, like, I want to take delivery of said gold. Because if someone's like, oh, I have your physical gold like at my house or in this vault, I'm like, all right, well, like, what happens if, can I see it? That's what people think there's no gold in Fort Knox.
Right? Can I see it? No, actually you can't.
No, you can't.
Sorry.
Just show me a picture of it. No,
we can't do that either. Yeah. Hold on, AI is not quite developed enough yet. No, definitely. And I mean, that's sort of like how it works, right? You have in like a lot of the Federal Reserve banks and the Treasury vaults and stuff like that, they have gold, like just piles of gold. And it's like, this is Germany's gold, that's China's gold, this is Russia's gold. And when like China buys some gold from Germany, well, they take some from Germany's pile and they move it over to China's pile. Yeah. Well, that's what they used to do. They probably just do that all in a spreadsheet now.
Didn't we have some Russian gold that we were like, we're not giving back to you? And I think Germany too. Some of the central banks had some gold, and then when there was political turmoil, we're like, we're not giving your gold back. Or I think Germany actually asked for some of their gold back, and we're like, nah.
No, we're going to keep it here.
So, like, or we'll give you back some of it. Yeah, we'll give you back some of it. So there's definitely like, there's some big players going on in that market. And so the precious metals, particularly gold and silver, sometimes get lumped in some possible manipulation that's going on. So that's another reason why you want to actually, hold and physically,
and
have that.
It. Well, and you look at, like probably the most popular gold investment is like the GLD, the ETF.
Right.
Right. And so now I don't know this for a fact, but I have heard tell that there are at least 2 valid claims for every ounce of gold that ETF holds.
Right.
Right. So basically you own a share, I own a share, right? But there's only 1 ounce.
Yeah.
And so your receipt says you own that ounce. My receipt says I own that ounce. Both of our receipts are legitimate. How do we solve that?
They are hoping that not everybody asks for their gold at once.
Right, that there won't be a redemption.
Yeah.
Right, or a run, like a bank run, basically.
Right.
So
that's why it's interesting, the intersection between something like that and technology, right?
It is.
Because that's where cryptocurrency and the idea of proving ownership sort of comes in, because there's all these assets that you want to own, but if I can't store all that in my basement.
No.
And some of it is, you talk about like land, like mortgages being digitized and all this tokens and stuff like that.
That's what really excited me about the NFTs, the non-fungible tokens,
right.
was things like mortgages, contracts, where I just bought a house. We didn't need the title attorney and to do all of those different searches and stuff like that and pay all those different fees if we had just been able to transfer the title to the house from the seller to me, the buyer, on the blockchain.
Yeah. So it seems to be there's that intersection, and when people hear NFTs, I think they just think like, oh, it's a little
it's a picture of a monkey.
It's a JPEG monkey. Like, why do I need to pay $60,000?
Yeah, no,
for a
I was
JPEG?
really frustrated watching those things blow up, because I think that there's a lot of value to NFTs,
right.
and I think that really just, destroyed the image of them in everybody's eyes, especially at least retail investors. I think folks that are still, thinking about that Web3, still see the value in them and are still working on them and everything. But it's definitely going to take a big push to get people to forget about the Bored Ape Yacht Club.
Right. Yeah, I think the people that are still in it are pushing there's always some sort of physical asset that is tied to that, right? So even if it's a piece of art, you can actually also have an NFT that goes to a physical piece of art, but you also have the NFT ownership to show that, like, hey, this actual, and sometimes like owning the NFT gives you access to whatever you want to do. So that seems where it's going. But
we used a comparison early on in Delaware. They have these ceramic license plates that you can buy.
Yes.
They're like black ceramic license plates. There's a certain number of them. The lower the number it is, the more expensive it is. Your single-digit ones are like $100,000 or more, millions of dollars maybe even. I don't know how much a single-digit one is. But I know that I've seen like, $10,000, $20,000 cars with $50,000 license plates on them in Delaware. But the thing is they don't have the ceramic tag on the car. They have a metal version of that tag, so they own the ceramic tag, right? That's their sort of like, they can prove ownership of that. And then they have this, version of it that they can put on their car that is, they feel safe driving around with.
Right. They don't want it to get stolen. If it's stolen, it's not the actual piece
exactly.
of thing
and
that
they can come
old.
with their,
right,
proof
and say,
of
this
ownership.
is mine.
And like, no, that's my license plate number.
Yeah, to me, that seems to be where the valid use case of these things are, where you can physically own something, but you can still easily transact the ownership back and forth and like, have it be trustworthy, because the GLD is a good example. It's like you have these people, but like, is it really?
Yeah.
You know what I mean? Because it's not on the blockchain. You're just relying on some person in there. So
an accounting firm that they hire and pay every year to tell them what they want to hear, basically.
Yeah, exactly.
No, definitely. And you mentioned like portability, like, hey, how, like, and let's go, you said $100, let's go $1 million, like, how am I going to get $1 million of gold out of the country if I need to leave?
Yeah.
Pretty tough. How am I going to get $1 million worth of Bitcoin out? Well, in my phone.
Yeah.
In my pocket.
Yeah.
They used to talk about stamps were the investments of kings, right? The reason for that is because sometimes kings have to flee their country, right? And they want money to flee with. And it's really hard to pack up all your jewels and gold in the middle of the night and then quietly sneak out of town. But it's really easy to grab your book of stamps, some of which are worth $1 million a piece, tuck it into your coat, and slip out of town.
Yeah.
So that's what people did, and that's kind of what these digital assets are. And something that always sort of rankled me or sat wrong with me about Bitcoin, right, is that everybody calls it. Everybody says that it's an answer to fiat currencies, right? Because fiat currencies are based on nothing. Well, so's Bitcoin, man. I mean, technically, so's Bitcoin. There is nothing backing Bitcoin. It's just the idea that there's only a certain number of them, right? And so when I said that I see really exciting things happening in the gold market this year, this is another thing that I see coming, right? And I see basically a new digital currency coming our way that is going to actually be backed by gold.
Right. Okay.
Literally backed by gold. Inflation protection, it's like what the U.S. dollar was back when it was backed by gold, But basically, I had said that they're not finding any more big gold mines, and that's not 100% true. Okay, I don't want to be accused of lying to anybody, right? So they are still finding some bigger gold mines, higher grade ores, and things like that. But a lot of this gold is what you would call trapped gold, where, due to environmental difficulties, like say you can't get mining equipment up there to get to it.
Yeah.
If it's anywhere in the world, if it's on a mountain and it's above the tree line, can't touch it. Like global regulations, can't go there.
Really?
Yeah, above the tree line, they won't let you mine. They
need the trees to grow taller.
I guess, I don't know. You got to get the trees going higher. Maybe like climate change will help with that, and we can mine higher. But you get indigenous groups that are like, no, we don't want you in here. Like, or you're like right upriver from us. You're going to pollute our water. Or somebody was back there hiking and they saw a bird that hadn't been seen for 50 years, and like maybe that's its only habitat. So there's all sorts of reasons that gold can't be that gold that we know is there can't be mined, right?
Right.
But technically, there's still an intrinsic value to that gold. right? Because we know what the cost of gold is. Say right now it's about $2,000. We know what the cost of extracting gold is. Right now it's about $1,700. So the intrinsic value, or $1,300. So the intrinsic value of that gold in the ground is $700 per ounce. It's like simple math, right?
Yeah.
And so that's the number that you would take after exploring your site to a bank. And you'd be like, look, guys, we found what we think is about $1 billion worth of gold in here. It's going to cost us, we're pretty sure, about $900 million to get it out. So we'll make $100 million in profit. We want to borrow the money from you to bring the gold out of the ground. You know, this is how many ounces we have. This is the intrinsic value of that gold, you know, that $700 per ounce, the difference between the cost of extraction and the cost that I can sell it for. And the bank writes a loan based on those terms. Right? But if you can't get the gold out of the ground, technically there's still value in that gold. And like we mentioned, the big use of gold is as a store of value. So most of the time, we're digging up gold so that we can rebury it. Right? That doesn't make much sense. And you mentioned the heist movies. Vaults get robbed. It doesn't happen that often, but they get robbed, and it can happen in one night.
Yeah.
Right? But if you have $1 billion worth of gold in the ground, and it's going to cost you $900 million to get it out of the ground, well, you got to come up with $900 million. You got to spend like a couple of years setting up the mining operation, and then a couple more years digging all the gold out of the ground in order to heist that vault, right?
And then put it in another vault.
And then basically, find another vault that you can put it in.
With armed guards that you have to,
And so basically, you know, I'm not saying that I could rob a bank vault, but I could probably figure out how to rob a bank vault, you know, and I'm not saying that I couldn't, you know, mine a mountain, but I certainly couldn't do it without somebody noticing.
Yeah.
You know, so that's the thing is, you know, it's basically already in a great vault, right? The gold's already in a great vault. We can't get to it because of whatever. There's rules, there's regulations, you know, we just, the geography just won't allow us to get the heavy mining equipment back there that we need to get back there. But we know that there's gold in the ground. So if most people are just going to take this gold and put it back into the ground, you know, bury it in their backyard or put it in a bank vault, well, why not just leave it in the ground, right? We've already shown that it's there, you know, and we've already got the numbers that we could go to a bank and get a loan so that we could dig it out. Why not just leave it there? You know, we don't have to disturb the ground. We don't have to pollute using all of those, you know, the big like diesel equipment that they use to mine stuff. Like I said, you know, 200 tons of gold to get 1 ounce. You got to crush up that gold. You also have to use some really harsh chemicals to get the gold out of all of the other crap that's in there with it. You know, so there's lots of pollution. It's expensive. You know, you see movements. I mean, down in Panama, Freeport-McMoRan just closed one of their copper mines, right? One of their, you know, operating copper mines because people are protesting.
Yeah.
And they can't get trucks through. And they're like, man, you know, people don't want the mine here. We won't put the mine here. So,
to me,
you know,
that seems one of the biggest issues because it doesn't matter if you're using the most sustainable mining operation out there. If people say you're going to be mining or drilling or whatever, because we say mining, but a lot of times it involves drilling and digging, you know, you're strip mining or whatever you're doing.
Yeah,
people are
cutting the top off.
They're
a
like, no, you know what I mean?
I don't want that here.
No, exactly. And because it doesn't affect them. Usually it's actually there'll be indigenous people that are either for or against it, but a lot of times the biggest way they can get those things passed is by offering a certain number of jobs to the local area.
Jobs to the local area, yeah. Maybe like a percentage royalties to the indigenous tribe there.
Right. Mm-hmm. So the people, if that's not something, they already have jobs or they're not in there, they don't care. It doesn't affect them to having, they don't want the mine there. And so it's a big political upheaval, especially in some of these countries where, you know, hey, you don't even know if the leadership is going to be, you know, it turns over and
over really quickly.
Yeah,
and
these guys
from
were
one
cool.
side to the other side completely.
Yep, and they just get canceled. So that to me is the biggest issue you're seeing, and it's not just with gold mining; it's any sort of mining.
Any sort of mining, any sort of extraction, any sort of extraction from the ground. And you got to figure like any sort of extraction from the ground is it's not going to be great for the environment. No matter how sustainably you do it, you're going to cause some damage. But you also have, in places like Colombia, in Africa, less so in Canada. I'm just naming big gold mining regions right there. But illegal gold mining, it's a huge problem. There's literally a war going on in Colombia against illegal gold miners. The cartels use illegal gold miners to launder their money. There are just illegal gold miners out there, and they're just like leaching out all these nasty chemicals or destroying the area. They're killing people too because
Right.
when somebody comes too close to their illegal gold mine, they don't like it, so they shoot them. So there's literally, I've seen videos of the Colombian military out there, just sending missiles down on these barges in the middle of the rivers, because there's these illegal gold mines. And so, basically, like if there was a way for you to give those illegal gold miners, the possibility of profiting without illegally mining the gold, then that's probably hopefully something that they would go for. It's likely something that they would go for because otherwise, their other option is get killed by the government.
Yeah.
Or maybe go to jail. But it's kind of like a scorched earth policy with these illegal gold mines. Like, they know that they're going out there and that there are people that are armed and going to try and shoot back at them. So, they're not really like going in looking to take prisoners and things. They're going in looking to just shut things down, clean shop.
Yeah.
And, this is happening. This happens in Africa. This happens in, like Southeast Asia, in the areas around around Australia and stuff like that, New Guinea, things like that. Basically, like any major gold mining region, if there's a place where there's gold in the ground and people aren't allowed to get to it, a lot of times they'll mine it illegally. But if you give them an out, a lot of times they'll take it. And so this is the other thing is that keep hitting this thing, is you got major gold companies out there, like Kinross and Gold Corp and just like these other huge mining companies, right? And these guys have spent millions of dollars exploring different locations, proving that there was gold there, and then finding out that they couldn't extract that gold. And so if you give them the opportunity to recoup some of those sunk costs that they already put into the exploration, man, they're going to be in on it too. And all it's going to take is one piece of legislation from one country in one gold mining region. And then as soon as that happens, everybody else is going to see how successful that is. And I think you're going to see dominoes falling just in all of the gold mining regions around the world where you have this legislation changing to make this new sort of digitized version of gold possible.
Right.
And so it's something that I've been looking into for a little while now, and I'm really excited about it, and I'm positive that it's going to be happening this year, and I'm definitely going to be writing more about it and talking more about it in Wealth Daily, the Wealth Advisory, all of my publications, and if I'm invited back on here, definitely here too.
Well, we'll think. I know a guy. We'll get you back on here. Cool. Yeah, because we were actually talking about this yesterday, and it's a very. I still, there's still questions out there that I think a lot of people will have. But you're like, I don't hear anybody else talking about this right now.
No.
And to me, just from a broader market perspective, we believe both gold and these digital assets are going to have a big 2024. I think everybody we talk to around
Definitely.
Angel believes that. And I think the one thing that is hopeful about this potential like bull market in digital assets is that hopefully a lot of the crap that was out there previously, like you said, with the NFTs and all this stuff with the FTX and all these meme coins and all this kind of stuff, is people realize that there is nothing backing these. And the term Ponzi scheme gets brought up a lot with a lot of these, and the truth is it's most of them are.
Yeah.
And just the fact that there are so many of these out there, and people are just sort of taking advantage of the run-up and the success of Bitcoin, which was the original.
Yep.
And, there's a couple, like Ethereum. To me, like, those are really the only two.
Yeah, Ethereum,
like,
that's like a program.
Best of breed things. And there's some other ones coming up, but to me, like Bitcoin and Ethereum, and then there's a lot of what's interesting too about Ethereum is a lot of these digital assets are actually built on top of Ethereum.
Right.
So you can still have a quote unquote Ponzi / joke coin on top of Ethereum that you still need to research and make sure you're doing your due diligence on that. But the underlying platform is pretty solid.
Yep.
So that's why I like, we talked about this before, like go a step down and invest in the actual platform that is making these things happen.
Yep.
There might be some little spikes up in here, but what's going to be around in 10 years from now? And something that you can get in now and sort of just sit back and watch grow.
Oh, definitely.
And so with a digital asset that actually has something in the ground that is backing it, and it's not just like, hey, we say we're going to, we think this is going to be worth XYZ because of because someone else is going to buy it.
And there's literally hundreds of years worth of history that goes into valuing what's backing, a digital currency based on gold in the ground. Because it's not like, these folks are just figuring out how to value gold in the ground. We've been mining gold for a long time, and mining companies have been going to banks to get loans for a long time. So they know how to do this, and the banks know how to value it. And, you've already got basically like the whole ecosystem is already sort of there. There's just a couple of little things, you need an exchange, to be able to monetize, to digitize that asset and then monetize it. You need right now gold mining leases expire, right? Can't have that happen if you're going to leave the gold in the ground. You need that lease to be in perpetuity.
Right.
As long as the gold's in the ground, my lease doesn't expire. If I ever put a shovel in the ground, then clock starts ticking.
Yeah.
Right. So those little things, and those are the little things that are that I see happening this year. I know that there are companies out there building exchanges to trade these assets. I know that there are movements in some countries and gold mining regions that are pushing to extend those to make those leases indefinite, so that they don't expire. Once that happens in one place, then this new class of digital asset can be born. And once it's born, then people start seeing it all over the world. It's Bitcoin didn't explode everywhere all at once. It built up interest, and more people saw it, and more people got interested. More and more jurisdictions made it possible to invest in it. And that's the exact same thing I see happening here. And, it's basically at the very beginning. This is back when Satoshi made Bitcoin. That's where we are right now. But actually before it, while he was still programming it, before he released it out there, or she, or whomever, they I don't know. Yeah. It could be anybody. It could be a whole bunch of people.
It could be the CIA.
It could be the CIA. I've totally had that theory. I put that one out there. I said that I thought it would be kind of funny if it was actually the CIA that created Bitcoin, and it was just this whole scam to get us to trade our actual money for digital money so that they could then cancel the digital money and be like, we own you.
And we got it.
But I doubt that's actually the case. That's just my little fun tinfoil hat thing there.
Hey, it's always
possible, fun thinking about conspiracy theories. But yeah, I mean, it's just all the things are in place there, and I feel like this is where Bitcoin was in the early 2000s when nobody had ever heard about it. Literally nobody is talking about this but the people that I have been talking with.
Yeah.
Outside of that tight knit group right there. Nobody's heard about it. So you heard it here first. And don't forget that. That's why you're here.
That is why you're here, because we never, despite some of the predictions that are put out here, and they are oftentimes correct, but we don't claim to have 100% track record. No. Anybody that does is full of shit.
Totally lying.
Our track record is pretty good.
It is.
However, when we bring these things up, like I said, we are often early, if not usually too early.
Super early.
So
I've often said that sometimes I suffer from premature allocation.
Yes. Yes, and but
I'd rather be early than late, man.
Exactly. That's sort of the philosophy that it sometimes is difficult, because the hardest part about this style of investing, this sort of trend following, but also just contrarian, is the psychological aspect of it, right? So it's very hard when you're hearing about things out there and everybody's talking about it to not try to jump in because you want to take advantage of it. But that's usually the wrong time to do it. The right time to do it is when you bring something up and someone's like, what are you talking? That's stupid.
Right.
You know what I mean? And sometimes it does end up being a non-starter. Sometimes it's several years before it takes off.
I mean, look, you were talking about Bitcoin, like 2009, 2008, 2010, like back when it was like $50, $100, stuff like that.
Back in the early days, I was following along with it, but even when I was following along with it, it still was like $50, $200, and like there's people that were like buying a pizza for 10,000 Bitcoins.
Yeah, it was crazy.
10,000 Bitcoins, which is, I don't know what that's worth now. Someone exchanged for a pizza back in 2009, I think, when it first, I think it was 2009 when it got off the ground.
I remember hearing about that when I was at Morgan Stanley.
So these are the types of things that they sound crazy at first, and it sounds like, I don't know if I quite understand this.
It took a while. It was like 10 years from when I first heard of Bitcoin, and like guys that I knew at Morgan were, sort of trading it and messing around with it, to when we had that real explosion and saw prices get up to $60,000, $70,000 a
coin. I think the all-time high now is $69,000 for one Bitcoin. We're at about, as of this morning, I think 43, 44. So it's really not that far from an all-time high. And this is just my personal prediction because the election year tends to be very good for Bitcoin and digital assets. So, and it's usually because it's timed with the halvening, which is, when it gets more difficult to mine Bitcoin.
Have to, mine twice as much.
Yeah, and it's interesting the overlaps between actual real gold mining and actual Bitcoin mining. But it gets more difficult, and then it sort of has this self-perpetuating thing. And I mean, almost like clockwork, it starts running up, and this is right around the time it usually does. So that is going to, in my opinion, propel a whole new wave of these digital assets, and hopefully there's not, Matt Damon and Tom Brady out here pitching people and people piling in fortunes and losing it. I don't
want to talk disparagingly about celebrities, but man, as somebody who works for a financial newsletter company, right? I'm somebody that people want to buy me. Right? And I won't let them. But Tom Brady has more money than I could ever imagine accumulating. I mean, I can imagine accumulating it, but I'm probably not going to. But you can buy him. You can pay him. It'll do anything you want.
Yep.
There's a word for that. And I think it's prostitute, but I'm not sure. But I mean, it's just crazy. And not just Tom Brady. I mean, all of them. The Kardashians were out there. Matt Damon, he's a multimillionaire. I mean, you had star athletes, LeBron James. I don't think he needs any more money. I mean, even Mr. Wonderful himself, took $20 million from FTX.
Yeah. It's very difficult to not to imagine yourself in those shoes. Because, of course, $20 million. What do you want me to say? Sure, sign me up. But like you said, these are people with reputations that likely are already multi-millionaires. And they can't really seem – and I think really the issue is –
they don't need the money. They've got the reputation with far more people than I do.
The main, I think, issue is they didn't really understand what was going on.
Oh, I'm sure.
And they just expected, they had people behind them that were saying it was a good idea and it was all good.
Oh, yeah. I'm sure the business managers made those decisions for them. But I mean, people, I hate this, there's the guy Dave Ramsey, the financial guy. And he's taken money to give recommendations for companies that have just completely and totally screwed his listeners over. Companies that are facing class action lawsuits now because they took so much advantage of people. But somebody told his business manager how much they were going to pay him, and the business manager was like, yeah, he'll probably do that. I mean, you saw the same thing with. I think what really, is the worst. It's not so much those ones. It's people like Jimmy Fallon and Paris Hilton when they were on TV showing their NFTs. Right? Didn't mention to anybody that they were given those NFTs for free, and they were also paid like several $1 million to talk about them on TV. That stuff was kind of, I thought that was pretty shady, personally.
Yeah, I mean, that's the one thing that we try to focus on here is, I think everybody, like I said, no one's perfect. The research that gets put out there, all the newsletters are to the best of their ability, and they're doing the actual research and digging into it. And if it's wrong, it's wrong. But
it's honestly wrong.
Right.
And that's the deal, is if I'm wrong honestly. I was wrong. People make mistakes. Sometimes, your theories don't play out. But, that word that you used there, we research. We are researching these things, and that's where you're getting the information. It's from research. It's not from a white paper that we've been handed by the company that tells us how much we're going to make and how great they are.
Right.
It's because we've researched them and we actually think they're great. And I will be wrong sometimes.
Yep. Anybody who tells you otherwise is full of shit for sure.
Yep. Certainly not married.
But I think our readers and listeners and viewers, so to speak, are smart enough to determine that. And most of the people that have been with us for a while understand that. And they are looking for ideas that are out of the box. And we hope to provide them a little bit each time. But, to get more of the information, they can subscribe to your newsletter.
Yeah, subscribe to my newsletters.
Or newsletters.
Lots of them. Check out wealthdaily.com.
Yeah, I was going to say Wealth Daily is where you're going to find all of Jason's free stuff.
Yep.
Some good shit on there. I read it every day.
Appreciate that. Thank you.
And and subscribe to our YouTube channel too. If you want to. So
the YouTube channel, check us out on Instagram. We've got some stuff
and
on
even
X.
comment. The comments I find very hilarious sometimes because people
please give me some comments.
Yeah.
If anybody, I just want to, if you guys like my hat, please give me a comment for that.
Yeah, I don't think you're going to get any.
You don't like the Babylon beanie?
No, it's all right.
It was the #1 stocking stuffer this year. I'm telling you, everybody wanted it, from the toddlers all the way up to the old folks.
All right. Well, that's what we'll end on. Okay. And again, thanks again for being on our show.
Yeah, thank you for having me.
And
guys, pay attention. I'm definitely going to have a lot more information about these new digital assets that we see coming in the gold space.
Looking forward to it.
Cool.
All right. Adios.
Thank you, sir.